All right, welcome back to the podcast, everybody, for episode 67. Anybody new to this podcast, so the only thing on the screen is going to be a shifting visual backdrop. Thank you to all current and past supporters, and if anybody else wants to support the channel and the podcast, or just help me continue being able to exist, then PayPal and Patreon links are both down in the description below and in the top pinned comment. Now, for once, we're going to start off with the metal prices and inventories and everything. As, albeit not enormous ones, we did have some pretty sudden, pretty abrupt price drops that occurred this week. Starting off, as always, with gold. Gold fell suddenly out of the 1900s down into the mid-1800s, presently, as of this recording, being $1,864 per ounce. And were it not for the other factors, I would potentially attribute that to the sudden restart of increasing global gold inventories, as over the course of this year, global gold inventories had been increasing up until a few weeks ago. Since because of the whole 2020 situation, one of the various economic effects that it's had was collapsing jewelry demand by about half worldwide. And unlike with silver, jewelry is still a huge portion of gold's demand, so that really cut off gold consumption, or cut off a huge part of gold consumption. So gold inventories started rising over the course of this year, starting off at around 8 million ounces in storage, and they got all the way up to a bit over 37 million ounces in storage, until a few weeks ago they started being drawn back down because of, we don't know for sure yet, until the third quarter data gets released, whether it was recovering jewelry demand, or whether it was all just increased investor demand from everybody buying up gold because of the uncertain economic situation at the moment. But they started drawing back down a little bit and got back down towards 36.5 million ounces in storage. And then over the course of this week, or this past week now, they jumped back up pretty quickly up to just under 37.1 million ounces in storage. And like I said, normally I would consider a suddenly renewed upswelling of inventories to be enough for sudden price drops. If each metal, each resource experienced sudden upswelling inventories, but other things also were happening this week, as the whole 2020 medical situation in Europe is starting to regain some of its momentum, and so that is starting to slow things back down in Europe economically. And in the US, various monthly economic reports came out, and the economic recovery is looking like it's starting to stall. And projections and outlooks for consumer spending especially weren't looking too great, as the whole potential second stimulus round continues getting hung out to dry by Congress. So all the negative reports and bad outlooks sort of triggered their own effect in terms of stocks and in futures prices for a lot of things. Granted, they're not without other correspondence. All the precious metals inventories are still increasing, and some of them, like platinum, we'll get to in a second, increased by quite a bit over the previous week. But regardless, that's sort of the broader roundup of what was going on. Continuing down the list with silver. Silver prices dropped a decent bit from up around 25 or 26 down to now just under 23, coming in at $22.97 per ounce. Silver inventories have increased over the course of this whole situation, as granted not as much as gold. The collapse of jewelry demand wasn't that big of an issue for silver, because silver's predominant demand source is industrial consumption, i.e. electronics, solar panels, mirrors, catalysts, all kinds of other stuff. But some portion of silver is still consumed to make jewelry, and the collapse of that demand by half did negate the silver deficit and did put it into a bit of an oversupply, enough to start increasing inventories again. They'd been heading down towards 300 million ounces in storage, and they've been able to increase by about 20% over the course of all of this. Again, not that much compared to gold, which increased by like 3.5 times. But silver inventories, as of the end of this past week, were up to 372 million ounces in storage. Platinum prices also took an abrupt drop. They were up in the 900s, if I remember correctly, around the mid-900s. Now they took a sudden drop down into the mid-800s, coming in at $849 per ounce. And as Platinum Inventories over the course of this past week took one of their biggest jumps in a long time, and particularly over this whole situation that they've been building up during, jumping up in 1 week from 545,000 ounces in storage, only in thousands because platinum group metals are much rarer, jumping up from 545 to 585,000 ounces in storage. Now, the platinum group metals have been building up in inventories over the course of this year because one of the other things, apart from jewelry demand, that was hit by this whole situation was new vehicle sales. They were crashed by quite a bit, and the primary source of consumption for the platinum group metals is catalytic converters for ground vehicles. And the platinum group metal inventories had been getting pretty low. Palladium especially was all the way down at only 29,000 ounces in storage. Platinum was around 152, and that had come about because of a deficit that had built up over years, as output from platinum group metal mines has basically been flat for the last decade. Whereas, as always with human civilization, you can take a guess as to which direction demand kept going in. Palladium prices dropped down from the 2300s down into the 2200s, coming in at $2,230 per ounce, with global palladium inventories bumping up from 129,000 up to 138,000 ounces in storage over the course of just this past week. And rhodium prices, which recently broke their prior record and got all the way up to $14,500 per ounce, have been falling over the course of the past week, and as the week ended, they dropped down to $13,800 per ounce. Now, the base metals, aluminum inventories had been building up over the course of most of this year because of the whole situation, and thus manufacturing of those things slowed down, particularly one of the big factors for aluminum being new vehicle production. Aluminum inventories at the start of all this were at around 1 million tons in storage worldwide, and over the course of this, they built all the way up to about 1.7 million until about 2 months ago, when manufacturing sort of was picking back up to pre-2020 situation levels, and inventories started being drawn down again, and over the past 2 months, they've been drawn back down to 1.48 million tons in storage, with aluminum prices currently being about $1,760 per ton. And lead inventories built back up by a lot. They were down in the 60s, and over the course of this, over several decently large bulk carrier shipments from mines everywhere, and very likely some returning shipments also from industry warehouse buildup because of lack of use at the factories. Lead inventories got all the way back up to 137,000 tons in storage, and over the past week they dropped down to 135, and it was particularly the new vehicle sales that hit lead the most, because the predominant, hugely predominant source of lead consumption is for lead-acid batteries, most of which are ground vehicle batteries. Some lead-acid batteries are industrial batteries. They're used to run conveyor belts and factory equipment when there's some brief power interruptions, but most lead-acid batteries are vehicle batteries. And lead prices are currently at $1,738 per ton. Nickel inventories have mostly remained the same, in the 230s, currently at 237,000 tons in storage, with nickel prices currently being around $14,400 per ton. Zinc inventories also had a big recovery over the course of all of this, being restored from the lower hundreds all the way up to 225,000 tons in storage, and they dropped down to 219, and then over the course of this past week they built back up to 221, with zinc prices currently being about $2,376 per ton, and the last of the base metals, the much less abundant tin, inventories having a normal range between 5,000 and 15,000 tons in storage. And before all this began, tin inventories had actually just dropped under 5,000. However, over the course of this, they've built back up to around 10.5, and in the past couple weeks, they've been slowing down, and at present are at 10,635 tons in storage, with tin prices currently being just over $17,000 per ton. Alright, that's it for this one. So thank you everybody for sticking around and listening. Like if you enjoyed, subscribe if you haven't already. You can support if you want through PayPal or Patreon, only if you can, obviously. But no matter what happens to me, may God bless you all, and I will see you all around next time.